12%, right? And then you simply buy with buy orders down here, and you buy the pump, and you can get, you know, a 15% pump. So that's what we're watching for in the Dogecoin. I think you're going to come back down and retest these beautiful arrows down here as the price starts to move, because these are the price actions moving into the future. I think down here are good buying opportunities, right where this beautiful arrow is pointed to, and then where this beautiful arrow is at that double bottom right there, right? That's a phenomenal area to buy too. Two beautiful arrows to buy. That's why we have them signified with the arrow. 21 cents and 20 cents to play a crash and then a bounce back. If you want to play up here where this other arrow is, you can, but it's much more risky to try to play in the major overhead resistance when you're already in the thick of this overhead resistance with the 100, the 200, and the 50. Or the 200, the 100, and the 50, respectively, in the green, red, and blue, right? So we would feel more comfortable when this is down in this range and support to buy, and then you play the pump back up. That's what I'm doing at Vincenzo's Gold Crypto Investing. Ethereum, same thing. You can see Ethereum pop to the 200-day. Now, if it can get some moving, you can pop up into this region right here at about the $3,586.69. But again, this is very risky when you're buying into the thick of the moving averages in a super simple, easy way. A more chance for a probability trade would be to be patient, wait for it to come back down to underneath support, and then play a bounce from the bottom. Play a bounce from support, not from resistance, right? Because you could pop to here and then you roll over quickly and you're deeply in a hole because you weren't patient and you jumped the gun and didn't follow your super simple, easy plan to profitability. So we wait to buy the support. Right now you're in overhead resistance. And it's been stagnant this weekend, but we think a $33,069 would be a better buy to pump up to $3,369, right? Or $3,400. We think the better bounce spot would be buying down here. Much safer in a probability-based way, and then you could play that smooth 13% back to overhead resistance where the moving average would be downtrending, and it would look something like this, and then you run into it here, and then you come back down like that, right? Much safer and a better chance for profitability when you're buying down low. Now, if we look at the Celo, we have our beautiful arrows, and we were telling you spots to sell. We said this thing was, oh, this is XLM, and we showed you the first beautiful arrow at 37 cents where we broke this rising channel. Then we had that double bottom at 32 cents. We saw it was a great buy, and we put that second beautiful arrow up at 43 cents to back test upper resistance right here, which is this uptrending purple line, and it hit it beautifully and then crashed, right? And we told you in XLM that that's what would happen. And now this is in a similar pattern to the rest of the stuff. So I would think 28 cents would be a phenomenal buy opportunity. 27 cents, 28 cents to play a major bounce back. Something like this where you crash down and then you come back up to overhead resistance and then you can take another leg down. But if you buy it down here on a limit order and you get it in at 27, you can play again another 13% to overhead resistance. So that's what I like in XLM. The Celo, we showed you way up there with that arrow. That's a beautiful sell opportunity up there because the price was going to come down, and our underneath target is $2 and 13 cents, and you can see it's crashed all the way down to almost there. It got to $3. And then we showed you back with this big crash when we were up here in Celo that we would be crashing in a violent up and down fashion, but it crashed, and then a little pump, and then a little pump, and now a little pump, right? So we got that up and down fashion. And I would say here, that's why I kept saying to take profit. Then I said to take profit there, and now, because you could see what was going on in Celo. Now, your next logical spot to go would be to retest this underneath support that you hit a couple days ago at $3.69, right? So it would look something like this, and then you could try to pump back up, and that would be a good, phenomenal buy here and sell an overhead resistance. Or you could try to pop like that again and come right back down like you did here, like you did there, and like you did now, right? You pump, you sell right back off. You pump, you sell right back off. You pump, you sell right back off. So you could impulse pump and then you sell right back off within a few minute time frame. So you would have to be actively watching or have sell orders in to sell out up there. So you're either going to pump real quick to here and then crash down to here, or you're just going to roll over down to $3.68. That's what I'll be looking for in the Celo. The same thing with the Quanta, right? The Quanta. It's the same bullshit. I think we're coming back down to the $200 level. You broke up out of this rising wedge, and now you're starting to have massive volatility of big pumps and big dumps. And the next move from here would look like maybe you got a left shoulder ahead, and you pump back down here to the neckline, then you break up the right shoulder, and then you finish the pattern and drag that into the future to the point of the breakout, and that gets you right around our $200 target. I think that's what you going on in the Quanta. You got a head and shoulders topping reversal pattern. Like, subscribe, and share with the Vincenzo's Go Crypto Investing for more scintillating updates. Peace and love. Peace and love.